We are talking about careers in accounting. Today, we're going to stick with careers in financial accounting, which is what you're learning in Accounting 301 or learned. And we're going to talk about what happens when you go to work for a company in financial accounting. So there's a lot of different jobs, right? You could start at the very bottom, which is usually the accounts payable clerk. That's the person who pays the bills. You don't always need a four-year degree for that. And they kind of pay accordingly, but some companies, some of your bigger companies, a lot of times everybody who comes to work for them needs a degree no matter what they're doing. So all the way up to, say, a controller. The top finance person is actually the CFO, the Chief Financial Officer. We're going to save that for a different video because that person really can come from the financial accounting route, from more of a finance route. There's a lot of different ways to get to that job, so I want to keep us purely in financial accounting. Okay, so you can start off the accounts payable clerk or accounts receivable clerk, which tends to be a little bit higher up. Still might not need a four-year degree, so you could definitely do that, you know, if you got your associates. Some companies, again, will ask for more. All right, and then you start moving up to being, you can be a general ledger accountant, which means that you're doing the journal entries. At that point, you're also going to be doing a lot of account reconciliations. So all of our balance sheet accounts, we have to make sure that what our account balance is, that we have all the support for that. So for example, accounts receivable, we have to make sure that all of the invoices we have outstanding add up to the amount that's actually showing on our trial balance and eventually in our financial statements. Okay, so from there, then you start getting into supervisory positions, so you can be an accounting manager. So now you're going to be supervising different groups of accountants. I'll stop here and just say that if you go to work for a small company, you're going to do all these things. You're everything. You're the AP clerk, you're the accounts receivable clerk, you're the accounting manager, you're the controller, you're everything. You may have a couple people working for you, so maybe you're only from the accounting manager up. I worked for a small company. It was me and another guy, and I pretty much did everything except he did the accounting for fixed assets. He was part-time accounting and part-time facilities. You go to work for a big company like Oracle, where I came from, there is a team of like hundreds of people who just do accounts receivable and hundreds of people who just do accounts payable, and probably, I don't know, there's probably 50 or 60 people who just did fixed assets. So the advantage of a smaller company is you're going to get to see more. The advantage of a bigger company is you can really specialize. It's kind of just what you're looking for. So anyway, so you're an accounting manager, so you're going to be overseeing some certain people, and then eventually maybe you'll become the assistant controller, and then you become the controller. And the controller is responsible for everything that goes on the financial statements, okay? So the AP, AR, fixed assets, booking revenue, booking expenses, reconciling accounts, preparing financial statements, that all is under the purview of the controller. So that is a lot of times when people go into accounting, that might be one of their goals. I want to be a controller someday. A lot of times once you get to be a controller, then you're like, now I want to be the CFO. But remember, we're talking about the CFO somewhere else. All right, how much are you going to make? Accounts payable, and again, this is going to vary depending on the size of the company. Accounts payable is probably the least you're going to make. It's probably not much more than minimum wage, depending again on the size of the company. Accounts receivable, you can start expecting a little bit more. If you have your four-year degree and you have taken the CPA exam, or sometimes even if you hadn't, you're probably going to start, I don't know. It's really, again, going to vary by the size of the company. You know, I've seen people hiring as low as 40 to 45 or as much as 70 to 80. But as you move up, you'll make more. By the time you get to be a controller, if you're at a smaller company, you should probably be, I would say, low six figures. You start getting to be in a mid-sized company, and that's probably going to end up being, you know, more like 200, maybe 250,000. If you're working for a big company, my guess is you're going to have a base pay that's right around $500,000 a year, and then you're going to get stock options, or what we call restricted stock units, but some sort of equity compensation on top of that. And that could, kind of depending on how well the company's going, that could be anywhere from a couple $100,000 to I don't know, $1 million or more. So it's a huge range based on where you're working. Sacramento, you're not going to make as much as you would in Silicon Valley. You're also going to live a lot cheaper in Sacramento, which is why I chose it. But, really, if that's what you want to do, then you definitely have the potential to make a lot of money. I would say this, if you want to be a controller, if you're like $500,000 a year sounds good to me, make sure you go work in public accounting. Make sure you get that Big Four experience, because for some of these companies, like your public companies, which we're going to talk about later in the semester, they're going to want that. They may want you to go as far as making partner before you make the switch. The controller at Oracle, he was a partner at Arthur Andersen, which is no longer in existence, but I think for like 10 years. The assistant corporate controller, who was my boss, she probably doesn't make nearly as much. She probably only makes about $350,000, $400,000 plus her stock. So she's still doing pretty good. I know she did not stay in public accounting that long. I don't know if that guy leaves, would they make her corporate controller? They might. So there's probably even different paths to get there. But she did come out of public accounting as well. So the public accounting is really important. But there's really some good monetary potential if you really love it. But like I said, once you get to be controller, you're in charge of everything. Like the buck stops with you. You are responsible for making sure that those financial statements are accurate, and you have a lot of people working for you, but that means you're responsible for a lot of people. I love working with people, developing teams. So for me, that's super fun. If you're like, I just want to sit by myself and have nobody bug me, that's maybe not going to be the job for you. But there's still roles within that corporate accounting environment where you can, even if you're like, I want to do my thing, you can do that, and you could still probably end up in the low six figures, probably a little over 100, maybe kind of the 100 to the 130 range. So definitely a lot of potential. These career spans are probably 10, 20, 30 years out, right? So you're not going to be in your third year making $500,000 a year. But you could definitely, by the time you're 5 to 7 years in, be making $100,000 a year. And then again, if you end up being a controller for a bigger company, really the sky's the limit. All right, I hope this was helpful, and we'll do another one next week.